What if the safe financial advice you've been following is actually the very thing keeping you stuck? Welcome back to another episode of the Vital Wealth Strategies podcast. I'm your host, Patrick Lonergan, and today I'm joined by Bronson Hill, someone who didn't build his success by playing the typical game or repeating the same worn-out money scripts most people are told to follow. Bronson is the kind of guy who looked at conventional wisdom, asked, does this work? And then made one bold decision, put cash flow at the center of every move. What makes his story so powerful is it didn't start with a massive paycheck or some perfect setup. Bronson was once working as a youth pastor on a shoestring budget, and through a combination of discipline, risk, and the right investing strategies, he's able to replace his entire income in under 4 years. But what I love about this conversation with Bronson doesn't just share the wins, he shares the hard lessons too, the losses, the moments that forced him to rethink everything, and the mindset shifts that made the difference. In this episode, we get into what it really takes to break away from the 9-to-5 grind, how to think differently about building wealth, and why creating options for your life matters more than just stacking dollars. We talk investing, yes, but we also talk personal growth, family priorities, taking smart risks, and the kind of discipline that actually creates freedom. So if you've been working hard, doing what you're supposed to do, and still feel like you're not getting ahead, you're going to want to listen all the way to the end, because Bronson's approach might be the missing piece that helps you unlock your next level in business and in life. And as you're listening, if you want to go deeper and start applying real strategies like the ones we talk about on this show, I want to invite you to visit vitalwealth.com/resources to access our free guides and wealth building tools. Again, that's vitalwealth.com/resources. It's packed with resources that help you build smarter, keep more of what you earn, and create real momentum. Also, quick favor before we jump. If you've been enjoying the podcast, would you take a second to leave a review? It helps more entrepreneurs and business owners find the show. It means a lot to our team. All right, let's get into it. Here's my conversation with Bronson Hill. I'm excited about our conversation today. We've got Bronson Hill on the podcast, and we're going to get into real estate and how to invest in that in a way that we get to avoid all the hassles that generally come with investing in real estate. The average landlord lasts about 3 years before they decide to hang it up and go do something else. And so we're going to get into how to avoid some of those things. And so Bronson, thank you so much for joining us here today.
Patrick, I'm excited to be here, man. Excited. You also have the same barber. So we got a great hairdo there.
Yeah, absolutely. Bald is the new black. It's good. Yeah. So very good. So I think about the entrepreneur that is looking at, their wealth, and they're thinking about, man, okay, I've got a tax problem. I've got capital stuck in volatile or inefficient markets, and there's just complexity in my life, and I don't need to add to that. And so I'm looking forward to digging into that. And then also just thinking about, man, internally, I've got this anxiety. I think about the stock market in general, and it's like, we've been on a really nice run. 2008 was the last, I'll say, real recession. And we look at market cycles, we're 17 years into this, 18 years into this market cycle. And it's like, wow, okay, that's a pretty long time. Usually they're 10 to 12 years. And so I don't know when the next recession's coming. My crystal ball isn't there, but it's something that the entrepreneur, I think, is concerned about. And there's also just a general distrust of Wall Street. And so I think there's, a few things that we think about. And then philosophically, it's really hard to produce freedom when I'm just grinding it out. And wealth should serve our life, not necessarily make us a slave to it. So I'm looking forward to digging into a lot of these issues. Can you give us a little bit of your background and how you got started doing what you're doing?
Yeah, so a lot of things you shared I can relate with. I was a well-paid medical sales professional. So I was working in medical device sales and surgery for 10 years in different forms. And basically I worked with doctors that made millions of dollars, but they worked 60 to 80 hours a week every week. And I thought that doesn't feel like freedom, right? So I was grinding it out. I was working hard, and a lot of people can relate with this. And it was like every quarter, if I met my number or I did, met my sales goal, it was like slap on the back, great job. And I'd do it again next quarter, but do bigger. Mm-hmm. So you feel like that. So especially a lot of corporate sales, or just even just general, like working a job, it can feel kind of soul killing. About 70% of Americans feel, they would say that they're not engaged at work. They don't like what they do. So I started to kind of like, well, what can I do to start generating passive income? Because if I can just, as Warren Buffett say, figure out how to make money while I sleep, Otherwise, I'm going to be working until I die, right? So can I do something that I enjoy and that I kind of gives me life? And so learned about real estate. I had been doing a little bit of single family. I had a mentor come around saying, "Hey, why don't you do multifamily?" And I said, well, "What do you mean? Like, I don't have the money for buying apartments." And he said, "Well, you can raise the money." So he, kind of gave me some tips and said, "Here's how you get started." So I started raising capital, started a meetup in Los Angeles, raised a little bit of money from one investor. And then I found a partnership of a guy who was helping other people raise money. And I approached him and said, "Hey, what if I help you raise money?" And so we basically worked together. We raised about $15 million together over the next 18 months. And that allowed me to be able to fire myself, which is the name of my book behind me here, of like, the subtitle is "Replace Your Working Income with Passive Income in 3 years or less," right? So why is what I'm doing now not working as a corporate employee, or if I have a business? And really the issue for a lot of people is, if I got disabled or something happened to a family member, or I just didn't want to work or wasn't able to work, would I have money? Would I have funds coming in to be able to
Mhm.
support? And that's what passive income really does for people.
Yeah, I love that. And I I I think there's typically a misnomer around real estate and passive income because we both have real estate backgrounds. My wife and I, we've been investing in real estate for almost 25 years now. And the thing that most people they think about, oh, I'm going to go buy a single family home, I'm going to go buy a 10-unit apartment building, and I'm going to create passive income.
Yeah.
And that's generally not the case. It's actually not passive at all. It's like owning a small business. I have to show up and start doing the work and finding the tenants and making sure the property's clean and neat and all of those other things. It goes back to that one of the initial comments I made about the average landlord lasts 3 years before they get out because
Yeah.
they're like, I don't have time for this. This is a pain in the neck. It's a hassle. And so I'm looking forward to getting into talking more about how you're putting together like truly passive income for
Yeah.
people.
Yeah.
So
It just to kind of highlight what you shared. So a lot of people will say, "Oh yeah, I should start, getting passive income." And what they say is, "I'll buy a rental house, or start an online business, or do trade options or stocks online." And none of those are passive strategies, because if you buy a rental house, like, it's not passive. Even if you have a property manager, they're going to be asking you, "Hey, the tenant didn't, are they, the toilet's broken. What do we do here? Or what do we do in this case? You need an upgrade." So you're getting constantly having to make decisions, and decision fatigue is real. So once you get to, I think at one point I had 4 single families, but I felt like it was a lot of work because I was buying in areas that weren't great. And anybody, you probably had, you're smiling, you have single family.
Mhm.
People think it is a way to freedom, but it becomes another job. So I realized if I fast forward to like, okay, I've got 30 of these houses, I was like, okay, I quit my corporate job and now I have a job and I'm just managing the manager all the day. And like, I don't want to do that. I know people that do it. I know people that are over $10 million that do it. I'm like, why do you do that? Because your time is more valuable, right? So the idea of passive income really is, does this, I do a little bit, and nothing's fully passive because nobody cares about your money like you do. But once you
Mhm.
kind of do a little work to vet a group or a project or something, you kind of do some work. And I talk in my book, a framework of how you vet different assets. And we do all different types of things, from oil and gas to real estate to debt funds to development, these kind of things. So how do you vet it? How do you know? And then you invest. Once you choose, you say, "Okay, I'm going to invest in this." You send your funds, and then you're hands off, right? You're not actually doing the
Mhm.
work. Somebody else is doing the work. They're providing reporting. They're giving you the cash flow, and they're giving, the tax reporting. So it becomes much more passive. So this is how people get to put millions and millions of dollars into projects they're not running. And that's where
Mhm.
it becomes very scalable.
Yeah. Yeah, and you're hitting on a really, really important point that I think we should dig into a little further. So we encourage our clients to, instead of going out and being involved in, their own 10-unit apartment building. Me personally, I like 300 units and up. I can put full management, maintenance, all of that sort of in place in that environment. I've had a 10-unit apartment building and I hated it. I always had a vacant unit. There was not enough like uh, infrastructure there to have like an on-site manager. It was just a pain in the neck.
Yeah.
I'd rather have like a single family home, which we generally would lean into like selling it on our financing, or 300 units and up,
Yeah.
like nothing in between. So I think that's good. And so what we have like encouraged our clients to do is like go work with an operator, somebody that's really, really good at this type of thing, that just needs more capital.
Yeah.
That they need some dollars to go do the next deal because they're in the game and they're finding opportunities all over the place. So can you talk a little bit about how you find and vet operators that can be somebody that can execute well on a deal?
Yeah, so it's a good question. We have a paid mastermind group that we have called the Wealth Forum. We have, man, we have an amazing meeting coming up in Scottsdale with Ken McElroy, he's a friend of mine, did the forward of my book, and a few others, and just getting in the room with amazing people, because a lot of times great deals come from a great network, right? So it's not just like you go online and this stuff's all here, or people talk about if people are talking about stuff like on social media or it's an ad or something else, it's much less likely that you're going to find a great deal, because a lot of times people that advertise and do this stuff, it's people that can't raise money on their own. So how these deals come from typically are private networks. So we have people that reach out to us, hey, come do our deals. There's a lot of other groups we find out there, and a lot of times it kind of comes in reverse order. So right, people will send us a deal, and then we'll have to take a step back and be like, well, hold on, before. A lot of investors are really unclear on what their goals are, right? So they'll say, I'll ask this question. I've had over 2,500 one-on-one phone calls with high net worth investors and individual calls, and they'll say, I'll say, what is your goal? Is it cash flow? Is it appreciation? Is it tax benefits? They'll kind of be like, well, kind of like I need some cash flow and I need some tax benefits. I need some, like, they just kind of like a little bit of everything. I'm like, well, you really don't know what your goals are. Right? And so I think for a lot of people, cash flow is really, really important. So it's important to figure out what it is you want, and then run that through a filter, the deal that you see or you find. And of course, you can be, podcast people reach out to us from shows and our website, whatever. Hey, let's have a call and we'll share about what we do and we'll get them on our deal list. But there are groups doing all types of different deals. Like you said, you're in senior care. So like, that's a great place to be. That's something we're very interested in, right? So we'll have calls with people that kind of vet those deals, and as an investor and also for our investors. So I think, really asking great questions. I think some great questions to ask are, well, tell me, what's the biggest risk of this deal? What's a way that, you could lose money? And I always have something in mind of what I think it is. But and a lot of times they'll share something totally different I didn't even think of, right? And they're the ones operating, right? So, but you ask them without telling them, and then they'll give you something like, oh, well, tell me, how's that going to work here? And then also, I love to, if I can speak with other investors or get a referral from another investor of like, what's it like with them? How's the communication? How's the performance? Because you can have great performance, but if they are terrible at communicating, it's not a good experience. It's not a good experience. So I think there's a lot of that. Like it's kind of this whole world of private deals that is kind of private, that we don't really have a lot of information about it. So the best way to get information is to talk to other people that have invested with this group and say, hey, I've worked with these guys for 10 years. They're awesome.
Mm-hmm. Yeah, I love that. And some key points there. We agree 100%. If the deal's on the market, we're probably not terribly excited about it unless there's some sort of value add or some opportunity for us to take a look at. Our network has been so valuable to us in finding new opportunities. People figure out you're in the game, and then it's bankers, it's developers, it's owners that are, maybe getting ready to get out of the game, and they'd just rather work with somebody that's got a track record versus like bring it to the marketplace. And so, yeah, that's I love the highlight there on the value of the network. It's incredible. Can you talk to us a little bit more about your mastermind and what that all entails? Because that sounds very interesting.
Yeah, it's one of the challenges I found, Patrick, is that anybody who's a high net worth person, and I mean, typically somebody who's worth over 2 million. We've got people that are up to 40 million or more. I've had one friend that's over 500 million. It's like the challenge is when you start talking about money, you open up your mouth and you start what you're doing with your money. It's awkward when you talk with family. You start talking to friends. Most people say, why don't you talk to your investment advisor? And I used to be, there's something called an RIA, which is a registered investment advisor. I used to be one. Now I'm an RIA. I'm a recovering investment advisor. I'm not registered, but I'm not an advisor, but like I'm recovering from that. And so, but everybody in finance is trying to sell you something, myself included. If you do deals, so no one is biased in finance. And so that's what I've realized, that for a lot of people, and I think of a guy that I knew who lived in Spokane, Washington, who was very high net worth, probably worth north of 30 million. And he was really isolated. He didn't know anybody. And who's he going to talk to in Spokane, Washington, high net worth, whatever. So he joined the Wealth Forum or was a part of a group that we did because he was looking for peers. He was looking for people that, could say what I said before. Hey, I've worked with these guys for 10 years. They're awesome. Don't watch out for these guys. And so there's a lot of that information sharing. The second thing I think that really happens, it's really powerful in a group like this, is I really thought it's going to be all about deal flow, tax strategy, and, investing kind of stuff. But what it becomes this peer group of like, hey, how do I get my kids to like learn about investing? How do I raise kids so they're not spoiled? I'm 55 years old. I've accomplished everything I want in life. What's next for me? Right. So, and a lot of mindset. So a lot of pieces around that just the only people that will really get that are people that are in that place or that can kind of speak to that. So we have a lot of dialogue around those things. And it's been just an awesome group. And the room is we select who's there. So we don't get people pitching anything, and we don't get people that are, lower net worth, just because it's just not a good fit. So we really curate the
Yeah.
room, and it's been really fun.
Yeah. No, that's fantastic. And again, this almost fits back into that dialogue around value of your network. It can help with deal flow, but I think about the people you surround yourself with. So valuable. I'm a part of three different, I'll call it peer groups. One C12, it's a Christian business
Yeah.
owner group. The second is EO.
Yeah. I'm in EO as well.
Again,
Yeah.
entrepreneurs doing cool, exciting things, going, wow, that's pretty neat. And then we're also involved with strategic coach,
Yeah.
which is like really like, let's get our mindset right to 10x what we're doing. And so I think about that, and there's an old saying that we're all familiar with, but if you look at your five closest friends,
Yeah.
like that's you. That's the direction you're headed. And it's like, great, let's get plugged in with like-minded individuals that are doing really cool things, and heading up and to the right, and let's be a part of that. So
Yeah.
that's great.
Yeah, I
Very
was a
good.
part of strategic coach for a couple of years, learned a lot there. I'm EO. I just joined YPO recently, and then
Mhm.
I love being in rooms with amazing people. It's so important.
Yeah, this is great. So uh, let's talk a little bit more about the types of deals you're looking at, because I think there's lots of different ways to make money in real estate. You talked about you know knowing what my goals are. Am I looking for cash flow? Am I looking for appreciation? Am I looking for tax opportunities? And my bias personally is, and we've made money in I think in all of those things, but my bias is towards cash flow, because it doesn't really matter what the market price does. If it cash flows, I can sort of sustain that. And if it doesn't cash flow, I have a limited number of those opportunities I can pursue.
Sure.
But I'm very interested in the types of deals you're doing, and how you look for those. And one final comment, I like, my favorite deals are the deals that I can force the appreciation, by driving the cash flow number up,
Yeah.
right? When you're a good operator, you can come in, you can see those inefficiencies or opportunities to increase the bottom line. And when you're multiplying the value times the number on the bottom line, it's like, well, cool, I can go impact that in a tremendous
Yeah,
way. So,
value add. Yeah,
uh,
value add's great. I think we did a lot of multifamily previously, where you come in value add multifamily, and then when rates started rising a lot, there was some real pain for a lot of people, us included, where I just I
mhm,
think it was like early 2022. It just, some of these properties decreased in value by up to 40%. In 2 years in the same condition. So we shifted, and we realized there's a lot of deals, a lot in real estate now. It's hard to find cash flow, and I think cash flow, just to your point, is the most important thing, because if you have deals that cash flow, you can hold it forever. It doesn't mean, if I get paid tons of money in 5 or 10 years, that doesn't help me pay for the bills now. That doesn't help me do I mean, it's good to take some of the shots. Like, okay, I've got this thing that if it goes right, these deals that will go really well. But if you cash flow and you can grow the cash flow, it's a way people can live. And that's what I talk about in my book, is if you have, so for me, I was making over 250,000 per year. I realized I didn't need 250,000. I needed about 6,000 a month. So about 72,000 a year. So I realized if I can just get to 6,000 a month, and that was a much more manageable number. And I got to that, then I got to the other number. And so it's like, but that's the number where you're free, right? So a lot of times we
mhm.
think we need this huge number, but it's just growing that and scaling it up. And it becomes like this snowball that kind of ramps up over time. So deals I like today that are doing that, we love, in real estate, we love real estate debt funds. We have a debt fund that we're involved with that it's paying, around 10 to 15%. It's first position. That's really important in debt funds. There are people doing mezzanine and second position, other things. If you have something that's primarily first position, that just means
Mhm.
if anything happens, like, you are the first role on that and nobody else has anything. So we're low loan to value. So it's 50, 60%. So if somebody doesn't pay, we just take over at half the cost. And that's kind of neat. So those type of funds, and right now those are paying, at the time recording this, about 10 to 15%. And it's typically fixed, or some sort of fixed, with a little bit of a lender fee that we share with this lender that we're working with. It's a 25-year lender. So we like those. We love oil and gas, the right types of oil and gas deals. There's two ways we invest in oil and gas. Typically, one is land ownership, called royalties, where you just own the land. And so there's a lot of deals now that are coming to the market that are over 20% cash on cash, just simply from owning the land where existing oil and gas is being drilled, right? And then some of
Mhm.
these funds that we do, there's an opportunity in the fund that they withhold some of those the cash flows, and then to put them into new projects, new drilling there. And then the second one is the actual drilling itself, where there's an unreal tax advantage. So we combine the cash flow and the tax advantage, where 100K invested typically reduces somebody's income for that year, no matter what kind of income, by 80 to 90%. So if I invest, the last one we did, it was 100K invested, reduces somebody's income by $90,000. So I could save somebody,
Mm-hmm.
if they're 30% tax rate, I could save them $27,000, $28,000 in year one, even before they get any money back from the cash flows. So we like those kind of deals. Those are the couple things, but there are others, but those are a couple things we like. And we also love like cash flowing businesses, small cash flowing businesses. We'll look at buying those as well.
Yeah, no, I love all those things. We've got an affinity for oil and gas as well. It's like when you look at the cash flow, it kicks off plus the tax benefits. It's like this is good stuff. So another thing that I think matters when you're starting to look at all these opportunities is who's doing the diligence on these, who's underwriting the deals, and how are they looking at it? Are they taking a conservative approach? Are they being aggressive? So I'm curious your perspective on how to figure out, like, is this a good deal versus not?
Yeah, it's a challenging one because there's lots of ways to underwrite deals. There's things that people do. I think for me, we're very slow to start with new operators. Typically, we have a new operator we're going to start with in the mobile home space that I think I mentioned, that I have a friend that I've known for many years. And he's invested with them for the last 5 to 10 years. I see their record. I mean, they're phenomenal returns. I have another friend who's worked with them more recently. We'll probably speak with an investor or two of theirs. So it's like, and actually I know one of the guys actually was working with another group previously that moved over to help them. So there's a few connections there, which is really great. But we had an operator that we started working with in the self-storage space. We'll probably do more deals with them. I've known this guy for 7 years and we just did our first deal together. Right. So it's like, but that's what really is really helpful. Even as a passive investor, if you go to events, if you shake hands with operators, you get to know people. And then it's kind of a small world. So people kind of get to know folks. So if someone's like, oh, I'm doing multifamily, I said, well, okay, how long have they been doing this? Who did they get trained by? Were they in Michael Blanc's group or Rod Khleif's group or Tyler Devereaux? Or, I know people in those groups. I can kind of start asking around, well, how's this person? Who are they? Whatever. And you kind of get to know just from your network. So that's all really valuable. So I think that's one of the big things, because investors, again, a passive investor that has worked with them, they're not biased to like lead you astray or to say it's great when it's not. They're not a general, they're just, hey, I'm in here. Or if they're upset, they're going to tell you. And so that's where you get an unbiased person, which is really rare in finance, right? So those are a couple things. We do kind of the typical stuff. We'll look at, what are their projections? What have they done? What's their track record? We do a background check if we're partnering with people. And I'm surprised how few people do a background check. There's a site called Checker, which is CHECKR without the last E, checker.com. And it's like $50 to run a background check. And it's like super simple criminal background check, just to see what's there. And it's just something you can do. Right. And then another really great thing that I recommend everybody does, it's the easiest thing in the world. Take PPMs, take like marketing material and put them in ChatGPT and just say, hey, I'm an investor here. What should I do? And it'll like give you, on page 196, there's this thing, blah, blah, blah. And like this stuff used to take hours to read. And now you just say like, hey, I'm coming at it from this. What are the concerns? What should I ask? Whatever. And it will just give you all kinds of information. So when you have that call or follow-up call, or you ask questions, you're asking really intelligent questions, and it's very efficient for your time. So I think ChatGPT is a great way to use AI in your investing. And I think very few people use it, but I think it's incredibly valuable.
Yeah, I would agree with that. I like giving chat a role. Like, I want you to play this role. And so let's say it's a mobile home park. I want you to be the United States greatest mobile home park investor. Here's the PPM. Tell me what you like about this deal. Tell me what concerns you have, what risks are out there that I should be asking questions about. Like, and it's like, it's amazing what kind of output you get. And now I don't have to be, not that you shouldn't have good legal counsel, but I don't have to be an attorney to understand this complex document that's in front of me another thing about a PPM that we should all recognize is a PPM is going to give you all of the reasons why you shouldn't do the deal. Like, you're basically going to lose all your money if you're not careful. And, this is the real risk, which is true of any investment. They could go to zero, but those are all things to be mindful of. If today's conversation with Bronson got you thinking differently about cash flow, building freedom, and creating more options in your life, here's the next step. Don't just feel inspired, take action. We've put together a collection of free guides and wealth building tools designed specifically for entrepreneurs who want to keep more of what they earn, make smarter decisions, and build real momentum. You can grab them right now at vitalwealth.com/resources. Again, that's vitalwealth.com/resources. Go check it out. Pick the tools that fit where you're at today and start turning these strategies into results. I think another thing that we've touched on and danced around a little bit, but investing alongside operators who also have skin in the game. I think that's an important piece of this discussion as well, because if somebody's organizing an investment and they don't have any real economic risk, that that's something that makes me a little concerned. We were involved in lots of real estate deals in the early 2000s, and any idiot could make money. And we saw lots of these funds starting to pop up. And then pretty soon we saw, oh, that guy doesn't actually have any money invested. He's taking a very healthy management fee off of said fund. And then the thing blew up catastrophically and investors lost all their cash. And they were like, I got paid for a few years to sort of mismanage this thing. So
Yeah.
I'm curious your perspective on sort of co-investment.
Yeah, I think it's important. I think it's we try to invest in every deal we can that is available. Sometimes too, there's an issue for a lot of real estate people I know, is that you're high net worth, multi-million-dollar net worth, but no liquidity, right? So it's all tied up in deals. And that's a challenge sometimes that, so it's great. Actually it's really great having partners that are well capitalized, because if a deal struggles, then they can come in and have some resources to help it. So we do a lot of co-GPing. We do a lot of even fund to fund. Sometimes other things we do look at what is the co-invest from the sponsor, and sometimes say, well, how much are you guys investing? And I think just to be real frank, sometimes we invest substantially. Sometimes we invest very little, or we don't invest, just because it depends on the situation where we're at. I don't look at it as like it's a deal breaker. I do think alignment of interest is incredibly important. And so what I've seen sometimes is we've had deals that we made absolute home runs to tons of money. We've had deals we've had lots of challenges in, right? So I think that reputation is a big deal. I think how things go and how people go through that is really important. I think ideally, an operator should be invested in every deal. They should have funds in there. For me, I think whether it's because sometimes I'll look at the partnership and I'll say, well, okay, like one deal was over $1 million is invested from the GPs. Okay, that's great. That's a way we can say, hey, there's a lot of shared risk here. And, obviously, if you get the sense that someone is from a short term looking at a deal like, hey, well, how's this going to go just for my sake? But, the challenge sometimes is, how much liquidity as an operator do you keep, and how important is diversification to you as well? Because as we saw with multifamily, if you were just heavily invested in multifamily, you could just absolutely lost your shorts, which some people did, And so I think sometimes one of the best, this is a little side note, one of the best things I did about 6-7 years ago is I bought a ton of precious metals, right? Physical precious metals. And we're watching now, I don't know if you're a gold and silver guy, but gold's up, 3.5 times what I find it. I think silver's up like 9 times. It's just insane what's happening. So having some different things going can be good too. So I think in general, yes, as a general rule, yes, there are situations sometimes where it's like, sometimes liquidity wise, it's like, okay, someone needs to keep liquidity for something else. And, that's understandable too.
Yeah. Yeah, no, I love the concept of just diversifying our assets. I wish my crystal ball was very clear on what, asset class and investment was going to be just up and to the right. But it's a little fuzzy. No. We touched base a little bit on business acquisitions. I feel like that's an interesting space. I'd like to spend a minute just exploring that with you. What does it look like if somebody comes to Bronson Equity and they are interested in being invested in a business? Can you walk us through that?
Yeah. So the amazing part of this is when we think of like real estate deals, especially commercial real estate or multifamily, think of something in terms of cap rates, right? So a cap rate is if someone owns something in cash, what percentage do you get per year? So if I bought a $10 million place and it returns, was it $500K a year? Is that 5% or whatever that percentage is? And so, if you were to convert cap rate to buying some of these small businesses or mid-sized businesses, a lot of these would be like a 30 or 35 cap rate, which means, you pay a certain amount and you're getting a third of your money back in the first year, which is crazy, right? That's if you bought the business in cash. And a lot of times you can finance them through SBA and through other types of mechanisms. And of course, SBA has some risks there too. But a lot of these businesses they call them the less sexy of businesses. Like if it's a cleaning business or it's a laundromat, it's a senior care business, these sell for 3-4 times profit, right? So it's very considerably cheap. Now, there's a challenge with that I found is that you don't want to buy too small of a business because you're not buying a business, then you're buying a job, right? You're like
Yeah.
putting yourself in the business. But I feel like if it's above 500K to a million in profit, it really gives a lot of space there where you can learn, maybe be in the business for a little, learn the business, or have maybe the old operator kind of stay in there, teach you whatever, and then you hire someone and you kind of manage that. But we like that a lot because it's just high cash flow. And then what happens is if you have, let's say that business that's selling, let's say it is a plumbing business or something, and it sells, it generates 1 million per year in cash flow. Well, if you can do that, maybe you buy a couple other businesses, you scale it up, you're able to kind of get it up to 5 or 10 million, of all revenue there. Instead of trading and selling for 3 times profit, you can sell it then maybe for 5 to 10 times profit, right? So it's just
Mhm.
amazing that when the larger you get with something, the more value is given to that. And so that's a great strategy. Some people go buy different things and kind of roll them up, put them together. But as an investor, it's very interesting because like we talked about, most people need cash flow. That's one of the highest cash flow strategies that I know. There are risks there, it's different risks, but again, for boring
Mhm.
businesses that have been there sometimes for 10, 20 years, or maybe somebody's retiring or something, it can be really attractive. And there's a lot of times you can come into a situation where somebody is like, hey, I'm done with this. And they can kind of just give you the business and say, hey, just pay me over the next couple of years or take out a little bit of a
Mhm.
loan and whatever. And we had a situation worked out in end of 2024. We went under LOI, which is letter of intent, to buy this e-commerce business. There was 27 million per year in sales. It was no Amazon business. It was a niche women's cosmetic and apparel business. So my partner and I were working on it. We had raised $2 million. We were going to do an earn out of 3 or 4 million from to the owners, and we had a loan for 10 million. And this thing produced 5 million per year in cash flow. Right. So we're putting $2 million of our own basically of money. We're getting 5 million. Now it did not end up closing because tariffs, and it was e-commerce, and just that you kind of flip at the, so it was, we learned some things there. But those kind
Yeah.
of things are life changing. They are life changing type things as an operator and also as an investor. The money is really good.
Yeah, I think that's great. And I remember reading, I think Cody Sanchez's book, Main Street Millionaire, on sort of this exact topic. And it's like, hey, these what we call unsexy businesses are fantastic opportunities. And so I love what you've got going on there. I think that's great. Um, let's see. We've also talked about, I love real estate from the point of view of the tax benefits. We qualify as real estate professional. My wife runs that business, and so when we buy a new asset with the big beautiful build, the cool thing about that is we've got 100% bonus depreciation, so we can do a cost segregation study and use that to offset our active income. Now, cost segregation study can also be done to offset passive income if you're not a real estate professional. So that's pretty cool. We talked about the tax benefits of oil and gas. Can you talk us through like some of the tax benefits that are out there through just being involved with Bronson Equity?
Yeah, so I think in general, it comes back to your goals, what you're doing. A lot of people we work with now, if you're in the great state of California like me, if you're a physician and you're making a lot of money, it's going to be pretty painful because we just do the math. It's like for every dollar over 1 million, I mean, you're paying 39% in federal, you're paying 13.3 in states, you're at 52 over 52% there in taxes. Then you have self-employment tax. If you're self-employed, which a lot of physicians are, 67%. Right. That's 2/3 of your money, over 2/3 of your money. So I think that, really considering, hey, what can I do to mitigate this? And, of course, we offer, business, or investments that do this, whether it's oil and gas, whether there's other things we look at. Okay, if someone like that is in that situation, is their spouse working? Are they not? Can they become a real estate professional? My last couple of years of me doing medical device sales, I actually was putting in more hours into my real estate. So I became a real estate professional, and I was actually still technically full time in my job, but I counted my hours, and I was substantially more hours over
Mm-hmm.
here. So it was a little bit of a hustle, but it really allowed me to be able to make a shift. So I think that in that case, there are tax strategists that basically do a free call. We've got a couple that we work with that we just refer people to, and they do a free call. And then if you want to work with them, they'll charge a fee, but they'll look at everything. And there are situations
Mm-hmm.
I've seen where, for example, a guy was a medical device sales manager, and his wife was a CEO of a Fortune 1000 company. They're making a lot of money, and they realized because he was doing real estate stuff, if he basically quit his job and just did kind of manage their portfolio of stuff, like they would actually take home way more money. His wife was just shocked. Like, how is this even possible? How is this legal? But the
Yeah.
tax code is not, it doesn't tell you like, here's how you pay taxes, or here's it shows you how to like reduce how to like, what's the guide and the map to
Mm-hmm.
align with the government to do what they have incentives for, right? Because the government, when they do housing, what happens? becomes the projects in the hood, right? It does not turn out well.
Yeah,
So
yeah,
they've
no,
realized there's a lot of great things if they incentivize you to do certain things to provide, energy or housing or things like this. So I think that, really figuring out what your goals are is really important. And then, for people to say, okay, if I want to reduce taxes, I'm a big fan of, paid tax strategists. Most CPAs, 98% of them are not tax strategists. But there
yep,
are some, and some are not even CPAs, but there's a lot of CPAs, or it's a handful, maybe 2%, that are paid for, they're fee-based tax planners and strategists that will come
mhm,
through and say, hey, here's what we should do here. We should set up this entity here. This person, or your wife should do this. You should do this, and they'll kind of structure things in such a way, and it can save hundreds of thousands or millions of dollars. So I watched one. I'm going on here for a bit. There was a
mhm,
couple brothers I know that sold a medical practice in California. Their tax bill, or it was a $5 million sale, so they were going to pay over $2 million in taxes, and they got it down to 125K. It would have actually been zero,
yeah,
but they found a way through strategy to get it down lower, which is really incredible.
yeah. Yeah, no, I love tax strategy.
Yeah.
It's something that is underserved in the marketplace, and you're absolutely right. The CPAs are great at the compliance, but their job is to look back in the rearview mirror and capture all the things that happened, and their business model just doesn't support tax strategy very well.
Yeah.
So, yeah, we've got a number of clients this year that exited their businesses for pretty healthy figures. One had a $9 million tax liability after his sale, and that number was zero when we were all said and done with the tax strategy. So it's a lot of fun putting those pieces together and utilizing the tax code in a way that allows us to minimize the tax bill. Because when you start thinking about the impact of tax on your wealth creation, and it's tremendous, it just erodes it like crazy. There's an interesting um, example out there where if I take a penny and I double it every day for 30 days, when I get to the end, it's like $15 million. It's some ridiculous number. When I apply 37% tax rate to that penny, doubling every day, it's like $15,000 or something. So it's just incredible the drag that tax brings into your wealth building. So
Yeah,
the less tax we can pay, the better. So
I agree.
uh,
Big
great,
deal.
thank you. Good. So what things haven't we talked about that we should be talking about? Because there's lots of opportunities out there. We've discussed, sort of getting ourselves out of traditional markets, the benefits of everything from real estate investing to small business to oil and gas, the tax efficiency there. What else should we cover?
Well, I think a big trend right now that people it really should be paying attention to, and I think that people under 30 are really paying a lot of attention, but I think over 30, over 40, they're not as much, is just what's happening in AI. I mean, it's been said that
Mhm.
in the next 5 years, that by 2031, we're going to have more change to the way humans live because of AI and robotics than in the prior thousands of years, which is kind of crazy. You think about it, and so this stuff is
Mhm.
happening. It doesn't always seem very quickly, but all of a sudden this big change happens. But I mean, there could be just almost overnight, seemingly, or in a very short period of time, people driving cars. There's 8 million people in the U.S. that drive cars for a living, right? Or drive trucks, and it's like that could be automated. You can kind of see how that could happen,
Mhm.
or we're kind of like, oh, I could see how that could happen. Or what happens to accountants? What happens to people that do bookkeeping? What happens? And a lot of this could just kind of be so. So I think for a lot of us, it can be a little scary, but I think it's important
Mhm.
to see, okay, if this happens, how can I get retrained? What are the new opportunities there? And people compare it to when people went from horses, to cars, right? It happened pretty quickly,
Right.
but it was like people that were like horseshoeing guys, or they would, put horseshoes on horses. It was like, oh, this was
Mhm.
terrible. But it created way more prosperity and way more opportunities. And
Yeah.
so, it's not that, there's been this theory that, oh, from the 1970s, right? Oh, computers are, we're going to have this thing where we're just going to be working 15 hours a week and not really doing it, having nothing to do. And of course, that's never been the case, right? So there's always going to be things to do. There's going to be things that are going to happen, but utilizing AI in your life, in your business. I mean, I think it's great to use chat GPT anytime. I mean, it's like, it's been described, if I had a person who had a 1 in 10,000 person IQ sitting right next to me, solving the biggest problems of my life, my health, my family legacy, my
Yeah.
friends, health, other issues, spirituality, like what are the things that I can do to help me with that? And so I
Mhm.
think it's great. So I think that, we can embrace it and look at it and say, okay, there's challenges and opportunities, and how do I be someone that's not, afraid of AI or afraid of, some of
Mhm.
this, but I'm actually using it to help me in my business and my life, and to make things easier.
Yeah, I love that. We've uh, absolutely embraced AI and the opportunities with it, and we're just looking for new ways to create more efficiency. And I 100% agree with you. I think if you think AI is a threat and you sort of stick your head in the sand, it's a dangerous place to be because before long, if you're not careful, you're the guy that's used to horseshoeing, and there's no horses to horseshoe anymore.
Yeah.
So that's great. So Bronson, when we think about all of these things that we've talked about, can you talk through what success looks like for an entrepreneur that starts building I'll say a diversified portfolio correctly?
Yeah, I think that's a good question. Do a diversified portfolio. I think again, it comes back to your goals and what you're trying to build for yourself and for your family. And I think that I just think it's so important to be willing to try things. A lot of people, I think for most people, their biggest thing is it's a kind of a form of analysis paralysis. Like, oh yeah, I know I should be
Mhm.
doing real estate. I know I should be learning. I should be investing. I should be doing something. But it's just easier to trust my money guy or to do like stocks
Mhm.
or index funds, and that's fine. There's nothing wrong with that. But for some of us, it's like, well, I actually want to create something different. I want to create a brighter future. I want to create something in my family that would allow me this type of freedom, or allow me to give in this type of way, or allow me to live this life that I want to live. And I think it's just really like that statistic I shared earlier about 70% of people don't like their jobs, or what they're not engaged at work. They don't like it. And the reason a lot of times is that we have this other thing that we love to be able to do. There's this other passion that's
Mhm.
there. And man, if everybody was just able to, or found a way to like become financially free and then be like, hey man, I'm just going to go after the passion, whether it pays a lot, or it's some
Mhm.
hobby that I love, right? Because I think that it really allows people to come alive. And so I think that's kind of the benefit of all of it. But I think that for
Mhm.
each person, they've got to kind of figure out what their goal is and then move towards it. And because, a lot of, thank God we're healthy. We've got the things in our lives that we have, but situations change. And so it's important to be
Mhm.
prepared and just keep kind of moving forward in your finances.
Yeah, I love that. Just a few highlights there, right? Like we've got freedom. We've got freedom with our time. We've got freedom with our opportunities we're going to pursue. We've got peace of mind through all of that. And then ultimately we're able to do that because we've got this predictable income that's showing up. And I think about the flip side of that, right? Like, you know, if I don't take action on these things, if I'm not creating wealth, I'll say even outside of my business, it puts me in a position where I'm stuck. I don't have the freedom. I don't have the optionality. If a market black swan event comes and sort of takes my business out, which is, there's real risk in being a business owner. I'm there. There's real stakes there, and so we take a look at all of these things, and we're like, we love building enterprise value inside of our businesses, but we also like building our balance sheet outside of the business to just protect our financial situation, our optionality, our family, all of those things. So
Yeah.
I think this is great, and we're also big believers in I'm going to call it who, not how.
Yeah.
Like, not this is a strategic coach idea, but it's like you don't need to go figure out how to go be a great real estate investor. Get together with somebody that understands how to be a great real estate investor, leverage your capital, and let that deal and that opportunity just kind of execute while you get to stay focused on the main thing. So
Yeah.
I think that's a key thing to
Huge.
consider as well. So I'd like to. We've talked about your book, Fire Yourself. We'll have a link to that in the show notes. How about your mastermind group? If somebody's interested in that, I know that's available on your website, but
Yeah.
can you just talk about like what are the best ways for people to get plugged into what's happening
Yeah.
at Bronson?
Well, yeah, that's a great question. So, yeah, we have it's kind of an invite only mastermind. If somebody's interested, they can reach out. One of the best ways I think to connect with us, we have a free gift. It's basically my three favorite investments of 2026. I talked about a couple of them, but there's one that I didn't share. But it's basically what and really what provides cash flow. Just some of the stuff we talked about. So if you
Mhm.
text the word cash flow, just all one word, to 33777. So you just text the number 33777, the word cash flow, all one word. We'll send that to you, and then it'll kind of keep you in touch with what we're working on. But yeah, our next event is coming up in Scottsdale, March 5th and 6th. It's all 2 days, all day. We have Ken McElroy and Christian Kathy Fedke and Russ Gray and just some amazing people coming in to share. And so it's going to be collaborative. People bring concerns, things they want to work through, and we're able to kind of mastermind it and work through with them. And then just get around amazing people that are also trying to figure things out for themselves and just have a lot of fun together. So it's fun to do this. We do actually do that 4 times a year. So we're doing it now, two-day event 4 times a year. And it's just been a blast. I can't wait to do more of it and really continue. We typically limit to about 30 people, and so we usually have a full room, and it's been a lot of fun.
I love it. I'm excited about checking out your free resource there because you've got my interest on that investment opportunity in 2026 that is out there. So this has been wonderful. Thank you so much. I appreciate all the good work you're doing, just helping people investing new opportunities that create cash flow. I think this is important stuff. Thank you.
Thanks, man. Thanks so much. It's been a blast. Thanks, brother.
All right, my friend, that's a wrap for today's episode. Thank you so much for tuning into the Vital Wealth Strategies podcast. I hope you got a ton of value from this conversation with Bronson Hill and that it challenged you to think differently, especially when it comes to cash flow, taking smart risks, and building real freedom for yourself and your family. And if this episode helped you, here's my ask. Share it with someone, a person who could use this information right now, a business owner, an entrepreneur, a friend who's grinding hard but wants a better path. Send it their way and help them take that next step. Also, if you want to go deeper and start putting these strategies into action, make sure you visit vitalwealth.com/resources to access our free guides and wealth building tools. Again, that's vitalwealth.com/resources. Go grab what you need and start building momentum. And one more quick favor before you go. If you've been enjoying the show, would you take a moment to leave a review? It helps more entrepreneurs find the podcast, and it truly means the world to me. And remember, you're a vital entrepreneur. You're vital because you're the backbone of our economy, creating opportunities, driving growth, and making an impact. You're vital to your family, creating abundance in every aspect of life. And you're vital to me because you're committed to growing your wealth, leading with purpose, and creating something truly great. Thank you for being a part of this incredible community of vital entrepreneurs. I appreciate you, and I look forward to having you back here next time on the Vital Wealth Strategies podcast, where we help entrepreneurs minimize their taxes, master wealth, and optimize their lives.